Good afternoon. Welcome back to the channel. This video is not financial advice. I'm not a financial advisor. Do your own research, make your own decisions. All right, guys. So things are getting pretty crazy to say the least. So I'm going to refer back to an old video that I did. The only reason I'm doing this is to highlight that I've been saying the exact same thing for 2 years. And in my personal opinion, this general time period should have been expected. And setting your expectations according to the reality of what's happening, I think, is really important. Too many people are setting expectations based on the world that they thought they lived in, not the world that's currently playing out in real time. And so I expect that if they're going to be doing what they're doing, essentially tanking the old system and rolling out a new system, I would expect there to be a shit hitting the fan moment. Well, an entire period of time where things were absolutely insane. And so back when I did that video, When Shit Hits the Fan, the whole idea was that before we get to the shit hitting the fan moment, I personally, you do whatever makes the most sense for you, but I was going to get all of my positions built out and secure all of my assets and have everything structured exactly the way that I wanted it. So then once we got to this point, I could just sit back and watch the fireworks. And that's exactly what I plan on doing. But everybody will have different degrees of confidence in different asset classes. And in my personal opinion, I think it would be wise to look at the different options: stocks, Bitcoin, crypto, gold, silver, cash, bonds, real estate, and maybe like one or two other options. See, that's the thing, is that regardless of what you do, you are making a bet on something. You're either making a bet on real estate or cash or gold, silver, Bitcoin, crypto, whatever it may be. You're making a bet on something. You have to choose at some point, okay? And it doesn't have to all be in one place. Even as big of a perma bull as I am, I still have a pretty decent sized silver position. And I've continued to buy more silver. And I also have a decent amount of capital in case the market drops further or just in case shit happens. Yes, I am very heavy into crypto, but that's also where I have the most confidence. If you don't have that degree of confidence, in my opinion, your capital should be allocated in places where you have the most confidence. And maybe you just want to break it up 20% here, 20% here, 20% here, so on and so forth. That might make the most sense for you. But it's all going to be different person to person. For instance, the amount of money I have allocated into ICP, if I were to have that same amount of capital in my bank account right now, at my bank, I would be significantly more concerned than what I am right now. Now, somebody else, you might think that's just insane, but it's really just a matter of perspective, and you have more confidence in certain places than I do, and vice versa. So there's that. So I would just, again, if you did not take my advice, and that wasn't financial advice, I was just saying, I mean, that's just common sense that you should be in places where you have the most confidence. Wherever that is, and especially if that's not in crypto. I don't know why anybody would invest in crypto without having an extremely high degree of confidence in what they're invested in. Depending on how much you're allocating, right? It comes back down to, how much risk you're willing to assume. But there's going to be some degree of risk with anything. And I think a lot of people assumed that there was zero risk in the legacy system and with the US dollar. And now we have a situation where there's systemic problems happening in the legacy system and in the new system. And the last I checked, USDC dropped down to, I think, 92 cents. I think it recovered back up to about 95 cents. But that's a serious problem. The longer that it goes on, all depends on how quickly it's resolved, or if it's resolved. But, guys, I would expect anything. A big reason why I spread my capital across so many different networks and different sets, well, primarily just different networks, but I also spread them out over different sets of keys. The reason why I did that is because if they're going to have to destroy this entire thing for my portfolio to fail. Period. And that's why I structured my portfolio the way that I did. Was that when I was looking at this, I said, all right, I'm going to look at 10, 12, 15 of the most, what I believe to be some of the most solid plays. I didn't get everything that I wanted. There's some positions that I'd like to have that I don't have. I mentioned that in my portfolio overview. But I'm going to spread my capital across numerous different networks and get all of those assets secured. Could prices go lower? Always. However, I don't know what things are going to be like once we're in the shit hitting the fan, period. And I don't know what things are going to be like after that. What I did know, and what I do know now, is that I could already buy and secure those assets at extremely, extremely low prices. And then I could just wait. And that seemed like the best course of action for me, but I can only speak from my perspective. I can't tell you what to do because I don't know your situation. I don't know the level of confidence that you have across these different asset classes. And that's why nobody else can tell you what you should or shouldn't do anyway, either. This might be one of the most unpredictable times I've ever, it is the most unpredictable time I've ever seen. And the only thing that I have been able to accurately forecast over the last 2 years is that the technology is going to move forward. And I've always said that the only thing I have an extremely high degree of confidence in, the only thing that's happening in the world that I have an extremely high degree of confidence in, is that they're going to continue to implement the new system. That's been my entire position ever since I got on here. That's been my entire investment thesis. And that's where I'm at. And so after the last 2 years, they've spent the last 2 years rolling all this tech out. And before that, they spent a considerable amount of time actually developing this technology. And it's pretty far along just with what they told us. And I imagine it's a lot further along than that, in my opinion. I think it would have to be. I think we're on a 6 to 8 month lag as far as when adoptions come out and they say, this new company is using this other, crypto company for XYZ. Like, that was being worked on months and months and months before that. If it's going live at the time of the announcement, that was being worked on months and months and months before that. So what I'm saying is that we're on a 6 to 12 month lag as far as when we hear something that was probably being worked on 6 to 12 months before that. And so I see everything just continuing to move forward. And so that's my bet. At the most base, at the most fundamental level, that's my bet. It's a very black and white thing. I look at this and I just say, blockchain, distributed ledgers, crypto, tokenization, NFTs, digital IDs, CBDCs. Is this going to move forward or is it not going to move forward? And that's the personal assessment that I'm making. And most of my decisions are based on what I believe is going to happen with all of that. And I personally believe it's all just going to move forward. But you might not. Okay. And so if you don't, obviously we're going to make different decisions because we have a different perception on what we're watching and we have different degrees of confidence in what's going to happen over the next 2 to 3 years. So what I would suggest is looking at where your capital is allocated and figuring out a breakdown across different asset classes that makes sense for you. That might be, again, 20% stocks, 20% cash, 20% gold, silver, 20% Bitcoin, crypto, whatever else. I'm gonna buy 20%, put 20% in bonds. But you do ultimately have to make a decision. And there is going to be some degree of risk associated with each and every option. And which is why I thought it was insane that so many people were advocating for staying 100%. I mean, I'm even in the old system to some degree. I have to be just because I still have a job in corporate America. And also because I want to have, some cash to the side in case things happen. But I thought it was insane that so many people in the middle of a wealth transfer, as they're rolling out a new system, as they've openly said, we're going to abandon the old system of money and accounting, and we're going to adopt a new system on the blockchain. They said this at the World Government Summit. I put the clip in my community tab if you have not seen this video. And as they're rolling this whole thing out, it's so insane to me that so many people suggested that the best course of action was to be 100% in the old system, in US dollars in their bank. And maybe, maybe over time that proves to be the right decision. I don't know. I can't see the future. But I have heard these people say what they're doing. I've seen the technology they've put out. I can actually use the technology, and I've watched them implement it all over the world. So it seems like a pretty open and shut case at this moment in time. And is it going to be a rocky road? Is it going to be a bumpy ride? I 100% anticipate that. But in every situation like this, I always ask myself the same question. Do I think it's any less likely that all of this is just going to move forward? And I always come to the same answer. No. And that's the same position I have right now. So I have my capital where I have the absolute most confidence. And I think that you should look at where you have your capital allocated, and you should go to the places where you have the most confidence, even if that's the exact opposite thing than what I'm doing. All right. That's all I have for this video. Thank you everyone who has liked, shared, and subscribed. Take care. I will see you. Not financial advice. I'll see you in the next video.